Guys, this is S&P 500 technical analysis for the next week from April 1st, which is Monday, to April 5th, that will be Friday. Now this was the last week. There were only 4 days and the movement of the S&P 500 was as we were expecting through these the daily and the precise updates of the S&P 500, which I give to my Patreon community members from Monday through Friday. Because on Monday the closing of the S&P 500 was below a strong support level, which is why there were heavy chances that irrespective of any open, the S&P 500 will come down. There was a surprise gap up open, but even after giving this the surprise gap up open, it came down to test that the heavy support level failed and then it came down. Everything was going well until Wednesday 3:30 p.m. Now at 3:30 p.m. on Wednesday, when the market was about to close, then out of nowhere there came a heavy bullish push in the Goldman Sachs. So the Goldman Sachs, Microsoft and Apple, the combination, it has helped the S&P 500 to breach the heavy resistance level which was putting a lot of pressure on the S&P 500, and until 3:30 p.m. S&P 500 was seen trading below the heavy resistance level. But now because the S&P 500 managed to close in just 30 minutes, it managed to close above the heavy resistance level. Therefore, it was acting as the support on Thursday. And in my pre-market analysis on March 28 to my Patreon community members, I've informed my members that now because the S&P 500 has managed to sustain above the strong support level, this means that any reversal will be limited to the support level and then we can anticipate a bullish retrace. Other than that, once the first hour candle has formed, then it was clear that now it is not going to give up. So there was a good support level. So S&P 500 sustained at the support level, but at the same time, any upward movement will also be limited intraday. Means only on Thursday that will also be limited. That is why we have seen this a very small candle, and whatever was predicted at 10:30 a.m. Eastern time on Thursday, the S&P 500 moved exactly as it was predicted in the update. Now guys, I am going to discuss the agenda of this S&P 500 technical analysis. Now the first point of the agenda is the S&P 500 technical analysis on the weekly chart. Because of this the heavy bullish candle on Wednesday in the entire US stock market, the weekly candle which was formed for the previous week, it's a heavy bullish candle clearly indicating more bullish movement. At the same time, the weekly candle is bringing in more heaviness conditions for the S&P 500. This means that even though S&P 500 is absolute bullish, 100% bullish on the weekly chart, but at the same time it is very heavy and it is extremely saturated and it is extremely overbought. So weekly chart means the big picture. Okay. Now the second point of the agenda is the S&P 500 technical analysis on the daily chart. So daily chart, you can clearly see on this the daily chart that the closing is above all of these the moving averages. There is a clear fan out in the moving averages. Okay. S&P 500 has not given up. However, MACD is again there is no change in the MACD, means the kind of movement we are seeing around from here. Okay, for last few weeks we are seeing that MACD is giving constant up and down, bearish crossover, bullish crossover, and generally, and I have shown you technically that generally the MACD, it gives a very clear, very linear, very good movement. Means if it is bullish, then it will remain bullish, right? If it is bearish, then it will remain bearish for long time, maybe 1 month, 2 months, 3 months, 4 months, 6 months, right? But now here what we are seeing, because of this kind of movement, we are seeing that for 1 or 2 days it will go bullish, then it will turn bearish, then for 1 day it is bearish, for 1 day it is bullish. Okay, so very rough movement. What it indicates? This indicates that the market is very heavy, extremely heavy, but somehow it is trying to sustain, right? Anyways, so daily chart means the short term picture. The third and the last point of the agenda is the probable movement of the S&P 500 from April 1st, which is Monday, to April 5th. So just like what I've discussed in the previous week, that any more bullish movement in the S&P 500 or in the entire US stock market will be subjective to the 39,800. We need a movement above or beyond 39,800 in the Dow Jones. Then only we can say that yes, now there will be some bullish movement or some good bullish movement in Nasdaq, S&P 500 and other indices or other ETFs. Okay, but if this condition is not seen, then no. It doesn't matter what the S&P 500 is doing, what the Microsoft or Apple is doing, etc. Nothing will work. So similarly, in this, the last point of the agenda, I will tell you that what is going to work for the S&P 500, what is not going to work for the S&P 500, where it is heading to, and if something happens, it comes down, then where it is going to get the support, etc. Now guys, I am going to discuss the first point of the agenda of this S&P 500 weekly technical analysis. And in this, the first point of the agenda, I will do the technical analysis of the S&P 500 on the weekly chart. This is the weekly chart. Weekly chart means one candle represents 1 week. Okay, not 1 day or 1 hour. Now, if you look into this, the last weekly candle, then it's a bullish candle, but it is not a heavy bullish candle like this candle. Okay, like this candle. No, it is simply a small bullish candle. Now this, the bullish candle has given a new all-time high to the S&P 500, and that is approximately 5265. Okay, what it indicates? The color of the candle, the shape of the candle, this is the all-time high. All of this indicates that there are bullish sentiments or good bullish sentiments in the market, in the entire US stock market. Okay, and these bullish sentiments are going to be seen on Monday. These bullish sentiments do not confirm any kind of gap up open. There may or may not be a gap up open, but it is not confirmed. Okay, because for the gap up open to be seen, there are certain conditions which must be there on the daily chart, 4-hourly chart, hourly charts, and most importantly on the weekly chart. Once the conditions are seen, all of these the charts, then only we can say that there will be a gap up open or a gap down open. And if you have subscribed to my YouTube channel for last many months or years, then you know that most of the time I can predict with the 100% certainty a gap up open or the gap down open. And guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Okay, so yes, so this time there is no guarantee for a gap up open or the gap down open, but yes, what we can say that irrespective of any open, we are anticipating bullish movement. Okay, however, this bullish movement is going to face a heavy resistance. It must clear the heavy resistance. It has failed two times. This, the previous weekly candle, this weekly candle, two weekly failures at this, the heavy resistance. Okay, so I will talk more about this condition in the third point of the agenda. Now let's talk about the technical indicators. In terms of the technical indicators, there is not much change on this, the weekly chart of the S&P 500. Okay, if you notice that on the weekly chart, clear fan out in the moving averages, and all of the technical indicators are supporting bullish, bullish and bullish. Okay, MACD is quite linear. If you notice that MACD is very good. Okay, perfect. For last many weeks or since November, mid-November, it is simply bullish. Okay, and this is what we expect from the MACD. Remember this point, because I am going to discuss the same in the second point of the agenda. So here you can see very good, very clear movement, very linear movement. Okay, so this is how the MACD works. Okay, most of the time, because this tells us the movement, the momentum, the trend. Okay, whether the market is still in that trend or not also. Okay, anyways, stochastic RSI is also bullish, and if there comes any more bullish movement, bullish candle, then it will hit the absolute saturation. It is already saturated, but it will hit more saturation. Okay, now it is clearly overbought. Okay, other than that, it is saturated. So what we can see here is that the S&P 500 on the weekly chart is 100% or absolute bullish, no doubt, 100% heavy or absolute heavy, 100% overbought, absolute overbought, 100% saturated, absolute saturated. So it is bullish, but it is also heavy, overbought and saturated. What does this mean? This means that the S&P 500, if it want to move up, it can move up, but there will always be a fear, some kind of fear, okay, because of this heaviness, that for how long the S&P 500 can sustain. And we can see, means in this kind of situation especially, okay, when it is heavily saturated and heavily or extremely overbought but is still sustaining, in these kind of situations generally we see very heavy fall and sharp, very sharp and heavy fall. Okay, it will not be like that it is coming down slowly, no, it will be sharp in the sense that within 1 hour you will see heavy fall, then the next hour it may sustain, next hour it may sustain, and then again a heavy fall, then sustain or so, and then again a heavy fall, then for 1 day, 2 day or 3. Okay, so this fear will always be there until and unless the S&P 500 comes out of the overbought and the saturated condition. Okay, so this fear will always be there, and with whatever is happening, whatever is going to happen, okay, or whatever will happen, I will keep you posted. Okay, and especially to my Patreon community members, on the daily basis from Monday through Friday, okay, exact movement and everything. And as usual on the weekly basis, I will show you the charts and the technical analysis. Now guys, I have one more information to share with you. This is the S&P 500 knowledge transfer program, or the stock market knowledge transfer program. Through this program I teach the technicals, strategies, trend analysis, predictions, support and resistance levels, and much more. The motto of the program is to help you become self-reliant. This program is delivered one-on-one basis, and this is my email address. Whenever you want to participate in the program to become self-reliant, then you can simply drop me an email. And also this is the Google spreadsheet. More details are there in the Google spreadsheet. And if you notice, this is the Google spreadsheet. So everything in detail, what I'm going to discuss, what I'm going to share, the technicals, the parameters of the technicals, and about the technical indicators themselves, then the trading strategies, options trading calculator, live calculations, okay, and the calculations of the option Greeks, these, and the option strategies. Okay, other than that, how to predict the movement of the market, how to analyze everything, okay, manipulation, intraday hacks, short-term, long-term hacks, etc. And these are the simple terms and conditions, and these are the snapshots of the meetings. So guys, this is my email address. Whenever you want to participate in the program to become self-reliant, you can simply drop me an email. I have given the link to this program in the description of the video and also in the comment section. Now guys, I am going to discuss the second point of the agenda of this S&P 500 weekly technical analysis. And here I will do the technical analysis of the S&P 500 on the daily chart. This is the daily chart. Now on the daily chart, okay, first comes the candle. If you look into the candle, the last candle that was formed on Thursday, it's a bullish candle, a simple or a normal bullish candle. It is not a heavy bullish candle. Okay, the shape might look like as if it is going bearish, but no, it is not a bearish candle. It is a bullish candle in all manners. So this bullish candle is simply indicating, but because this bullish candle is not heavy, and also the closing of the candle is way below its intraday high, okay, thus this is not confirming any gap up open in the S&P 500 on Monday. So there may or may not come a gap up open on Monday, okay, but the candle technically is not confirming anything about the gap up or the gap down open. It is simply saying that the S&P 500 has good chances or very heavy chances to sustain. Simple, that's it. Whether there will be a bullish movement, okay, or not, that's a different thing, but it is simply saying that even if there comes pressure, then also the S&P 500 is expected to sustain, okay, and that is the meaning of the candle. Now comes our technical indicators. So when we look into the technical indicators, then you will notice moving averages, clear fan out, closing of the candles, okay, is above the moving averages, clearly bullish, okay, Bollinger Bands bullish, Ichimoku, everything is bullish. MACD, okay, So first let me cover the technical indicators and then I will discuss the MACD. MACD is bullish, stochastic RSI is bullish, and as the rule says that if the MACD and the stochastic RSI are aligned in the same direction, then that direction becomes the direction of the market. Because the MACD and the stochastic RSI are now bullish, this means that these two are or will be giving bullish support to the S&P 500. And other than that, all of the technical indicators are already bullish. This means that overall there is simply bullishness, and the S&P 500 is 100% bullish on the daily chart. Other than that, if we look into the overbought and the saturation, then S&P 500 is about to get saturated and about to come into the overbought condition. Okay, so it is simply 100% absolute bullish, but it is not in the overbought or in the saturated condition on the daily chart. Now this is the MACD. So if you look into this, the MACD, then you are going to notice the movement was very linear, very good. The movement was very linear, very good. Then something started to happen from mid of February. We have seen a very rough movement, up, down, then up, then down, then up, then down. And then there came the bearish movement from the first week of March. Okay, and it remained bearish, and it was putting a lot of pressure on the S&P 500, and that is why we have seen that even though the S&P 500 was trying to move up, but again and again it was coming down, again and again it was coming down. But then suddenly, okay, it was able to move up and then move up. Okay, then it came down, and this kind of movement. So sometimes a bullish crossover, sometimes a bearish crossover. Okay, and this is happening frequently. This is not the usual MACD movement. Okay, and I'm talking about the technicals. Okay, and yes, for those who are not aware about the technicals, who do not know the technicals, so in that case you need not to understand the technicals in order to understand what I'm trying to say. I'm simply trying to say that there is a technical indicator. This technical indicator often gives very clear movement. Okay, so you will see that this is the MACD and this is the signal of the MACD, and they give very clear movement. They remain in one side, either bullish or bearish. But in recent times we have seen, or anyone can see, okay, up, down, or this the bullish crossover, bearish crossover, bullish, bearish, bearish, sustain, then bullish, then bearish, then bullish. Okay, and why it is heavily struggling to sustain? Because of the weekly chart of the S&P 500 that I've discussed in the first point of the agenda. Because on the weekly chart it is heavily overweight, heavily overbought, and heavily saturated, but still sustaining. Okay, so that's the magic, right? And but the real picture, okay, it can be clearly seen here on the daily chart. So I hope the MACD thing is clear, right? So now what we can see, or what we can understand, or what we can say is that the S&P 500 through the daily chart has the chances to move up and to sustain, because it is 100% or absolute bullish. Okay, and because it is not yet overbought, and also it is not yet saturated on the daily chart, this means that there are some good chances that it can try to move up further. Okay, beyond the recent high was 5265. This was the recent all-time high. Okay, but still it can move up beyond 5265. Okay, because of this particular combination on the daily chart. However, because of the weekly chart, as I mentioned again and again in my daily these updates to my Patreon community members, that because the S&P 500 is heavily saturated and heavily overbought on the weekly chart, this means that there is a very high, very heavy probability, and it will remain in the picture until and unless the S&P 500 comes down heavily, gives up heavily, and comes out of the overbought, overweight, and the heavily saturated condition. Once that happens, then it can sustain, and then it can try to move up, not a problem. But whatever happens, bullish, bearish, sustained movement, limited movement, or heavy movement, I keep my Patreon community members updated through these the daily and the precise updates of the S&P 500. And guys, if you also want to join my Patreon community in order to get these the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market, minimum 5 to 10 every week, then you can join my Patreon community, and I've given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here on my Patreon page, you will see that there are the two tiers. This is the daily S&P 500 updates, analysis, predictions, probable movement from Monday through Friday to the non-US and Canada residents. This is the daily S&P 500 updates, analysis, predictions, and the probable movement from Monday through Friday to the US and Canada residents only. So when you subscribe to either of these, then you will be getting the daily S&P 500 analysis, updates, probable movement, as well as the stock market opportunities, minimum 5 to 10 every week in the premium stocks of the US stock market. And guys, if you notice that many people have joined my Patreon community for last many weeks, months, more than a year or so, and they are getting the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities in the premium stocks of the US stock market. So guys, whenever you want to join my Patreon community in order to get the daily and the precise updates of the S&P 500 from Monday through Friday, as well as the stock market opportunities, minimum 5 to 10 every week, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, I am going to discuss the last point of the agenda of this S&P 500 technical analysis. And here in this, the last point of the agenda, I will give you the probable movement of the S&P 500 for the coming week, that is from April 1st, which is Monday, to April 5th, that will be Friday. Whatever is going to happen from April 1st to April 5th, I am going to discuss here. Okay, and this is the probable movement. So guys, before I begin, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. Now guys, you need to understand a few things, that on 29th of March, Friday, okay, and that was the holiday, the PCE, the core PCE data was published. Okay, and unlike the CPI data, we have seen that the CPI and the core CPI data, okay, it has indicated that the inflation is going to move up, or inflation is moving up actually. Okay, but here in case of the PCE and the core PCE, okay, what we have seen is that it is indicating that the inflation is coming down, or the inflation is holding. It is not holding, but there is the bearish pressure on the inflation, because the data has confirmed that the PCE and the core PCE readings are less than what they were in the previous month. And I think it is the core PCE which is actually 50% down, okay, or 40% down from its previous reading. And this is a good news for the stock market. Okay, anyways, okay, nowadays every news is okay, it is seen as the good news for the stock market. Doesn't matter whether it is bad or worst. Okay, even if it is even if that the news is worst, then also the stock market will move up. If it is bad, then also the stock market will move up. If it is good, then also the stock market will move up. And that is why we are seeing this, the unidirectional rally. Okay, unidirectional bullish rally, and that is why the market, the stock market, is in the bubble. Okay, and this is what I mentioned last month, that the stock market has entered into the bubble. Okay, that is why we are seeing a unidirectional movement where the market is non-reactive to the bad news or the worst news. Anyways, now there is one more important thing other than this PCE and the core PCE. Okay, so just remember that the PCE and the core PCE is supporting the bullish movement. Okay, now there was one more thing, and this is the personal income. This is the personal income and the personal expenditure and personal income. Now surprisingly, personal income, it has declined by 70%. Okay, so we can see that the personal income has declined heavily. Okay, and the important point is the personal expenses. The personal expenses have like doubled 2 times or more than 2 times what they were in the last month. What it indicates? This indicates that the people are still buying. Okay, the money is coming into the market, but now this money is not what they are earning. This money is the debt, debt. This money is the debt. So now I hope that this the data, PCE, core PCE, worst news, bad news, good news, okay, everything is clear to you. Now there is one more thing, that the next week, we can say that the next week is kind of blank, okay, because there will be some data. I think this will be the job opening data, which is going to be published on Wednesday. Then the non-farm payroll data, which is going to be published on Friday. But now this non-farm payroll data, it is not expected to make any impact, or the job opening data, it is not expected to make any good impact on the stock market. The outcome of the data may give the gap down or the gap up open, but otherwise, like after 1 hour or after 4 hours, the market will correct itself and will be aligned to the trend, whatever the trend will be there, short term or the long term. Now in terms of the numbers, okay, it is very, very clear. 39,800 is the condition. This is the approximate number, and this condition clearly says that we need 2 closings above 39,800 in the Dow Jones in order to confirm that the entire US stock market is going to move up, or at least is going to sustain bullish and is not going bearish. So we need 2 consecutive closings. So now we have got 1 closing above 39,800 on Thursday. Now we will wait for another closing, just 1 more closing, okay, above this mark, and then okay, it is good. Now when this happens, when the Dow Jones gives or is able to give 2 consecutive closings above 39,800, then the SP 500 will be able to move up further. And because now the SP 500 has gained, because it was able to breach the previous all-time high, and now it has made a new all-time high, okay. So we need 2 consecutive closings, okay, in the Dow Jones above 39,800, and then the S&P 500 is free to move towards 5,300. Now around 5,300 there is a very heavy, extremely heavy resistance level, okay. And now considering the weekly chart, the monthly chart, the weekly chart, the monthly chart, and the quarterly chart, the level which is around 5,300, okay, this is expected to weigh heavily on the S&P 500, okay. This means that from 5,265 to 5,300 something is there, okay, the heavy resistance, okay. Only 1% movement is left in the S&P 500, okay. This means that S&P 500 can try to move up and can easily move up by approximately 1% or 0.7%, okay, not a problem. But in order to sustain above and in order to move beyond 5,000, this the mark that is there, this is the approx number, okay. The exact number I will disclose to my Patreon community members, and if you have not yet joined my Patreon community, then you can join my Patreon community. I've given the link in the description of the video and also in the comment section. So this means that until and unless we get 3 closings, because this mark or this level is so strong that we need not 1, not 2, but 3. And once the S&P 500 is able to sustain, is able to give 3 closings above this, the strong mark, then only it will be able to move towards, or it can think of 5,400 or something, okay. But as long as it is trading below, or if it struggles, then it can come down. It can come down where? It can come down to this, the heavy support level that was there, this the heavy support level, and that has helped the S&P 500 to sustain, okay. And once that level is breached, then only 5190/92 zone will be there in the picture. But now, as of now, there are very heavy chances that around 5,300, this is the extremely heavy resistance, okay. There are like less chances, I will not say 50-50, there are less chances that the S&P 500 will be able to give 3 closings above this, the heavy resistance mark, okay. In this, the current movement, it can move up, or it will move up, not a problem, but it will struggle around here. It can breach the mark, okay, which is around or approx 5,300, okay. it can even breach. But closings, I strongly suspect if it will be able to close. Okay, and if the S&P 500 has to come down or has to give some reversal, some good reversal, then this is where from so this is the number, or this is the mark from where we can anticipate this the good or this the heavy reversal. Okay, but if the S&P 500 is able to breach and to sustain above and is able to give 3 closings above, in that case there will be no reversal, okay, at least for a week or so. Okay, and then we will see that what happens to the next level. But still I am suspecting whether or if the S&P 500 will be able to give 3 closings above this the mark. Anyways, if you are my Patreon community member, then on the daily basis I give you the probable movement, exact numbers, the levels, the zones, so you can trade accordingly and you can make changes to your trades. Okay, not a problem. So guys here you need to remember Dow Jones 39,800, we need 2 closings above, okay, 39,800. Yes, there is one more condition. If the Dow Jones gives 2 closings above 39,800, but the third or the fourth closing it comes below 39,800, then again it will have to give 2 closings above 39,800, because we need a sustained movement above 39,800 to confirm that the entire stock market is sustaining bullish, and not just sustaining, but the entire stock market is also it is also going to move up. Anyways, whatever is going to happen, I will keep you posted. Okay, and if you have not yet joined my Patreon community, then I've given the link in the description of the video and also in the comment section. And guys, hit like if you have liked this video, and if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel. And I've given the link to all of the programs in the description of the video and also in the comment section. So guys, this was my S&P 500 weekly technical analysis for the week of April 1st. Means from April 1st, which is Monday, to April 5th, that will be Friday.